let's lastly talk about what's actually going to happen. Is Kevin Warsh going to cut rates? And I think that there is an argument that rates should still come down a little bit because, yes, we have inflation pressures, especially with what's going on with the war, but we also have other struggles in the economy. And I talked about this a little bit a couple weeks ago that, things slow down when we have this sort of disruption with oil prices and when companies are struggling financially as a result of these gas prices. It's not just the cost of goods that goes up, it's the cost of running your business that goes up. And when businesses start struggling, they have to then potentially lay off people and things like this, right? It trickles down through the economy. So there is starting to be some signs of weakness in the economy. And that is what happens oftentimes when there's disruptions like the one we're going through right now. We tend to only think about the inflation impact, but no one's really talking about the overall global financial markets that can be impacted by these sorts of things. And those do tend to warrant some easing perhaps by the Fed. And so if there is a reduction in rates, which it's still widely expected, we'll have at least one more rate cut here in 2026. But does that get accelerated? What's the justification behind that? I think that Kevin Warsh wants to lower rates. I believe that. But is the information there to support that decision widely? And the last thing that I will point out, you guys, is that the Federal Reserve Chairman does not make these decisions on their own. There are 12 voting members at every meeting deciding on our monetary policy. So it's not like he can just come in and decide we're going to cut rates. It's not up to him alone to make that decision. Now, he is in a very influential position amongst those, 12 members, and is now part of that debate, part of that conversation, and definitely will have more ability to influence people in one direction or another. There's no question about that. My guess is he would be successful at moving the needle over time if he strongly believed that they needed to go a different direction with monetary policy and could explain the why behind it and get a consensus with people. But if you look at the way the dot plot has been and you look at where the current Fed members are, he's got a lot of persuading to do to get the pendulum swinging the other direction. And given the current environment, justify significant reductions in the Fed funds rate in the face of what we're dealing with right now with inflation and whatnot. But just don't forget that there are 12 members. This does change the dynamic significantly from what it was when Jerome Powell was there. I do expect his arguments to the voting members to have a different basis for them, right? And Jerome Powell's talked so much about we're going to wait on the numbers, we're going to wait on the data. I think you're going to see a more forward-looking and anticipatory type of process from Kevin Warsh, which may start permeating through our voting members, and you see a different style to how and when they make the decisions that they make. But I do not expect an immediate or substantial rate cut as a result of him getting in. Even if he believes we should have lower rates, it will be a process to get there. And I think we have a lot to digest with what happens with inflation as this war continues to play out, which as of right now, I don't see a significant resolution. And even if we get a resolution, with the UAE coming out of OPEC, with the supply chain being so disrupted for oil, even if this thing was over tomorrow, it's starting to look like we don't have as clear of a lens on exactly where oil prices would land, given how long this has taken and now the changes that are happening as it relates to oil production and the stability of oil prices given the shakeup with OPEC.